Hey, this is Chris Guldi with the Guldi Group at Keller Williams right here in Southern Maryland. I just this minute finished shooting a video about whether or not you should buy a flip. And one of the things I mentioned in that is that these are distressed properties that most buyers can't purchase because they're going to require cash, real cash, hard money, and hard money lenders typically only lend to experienced investors, or they're going to need a rehab loan. And to realize that a lot of people may not understand what a rehab loan is or why they're not extremely common and a way for people to purchase these distressed properties. So a rehab loan, and there's several different ones out there, the most common one we see is an FHA 203K. And what an FHA 203K loan does, and the conventional loans will work similar ways, but there'll be some different restrictions. So you borrow money to purchase the house and do some renovations. In fact, with a streamlined FHA 203K loan, you can even buy a house that doesn't really need any repairs and borrow enough money to do a new kitchen to it if you wanted to. All right, so let's say you find a bank-owned property sitting there, it's been aged, sitting on the market, no cash investors have wanted to buy it for whatever reason. You come in, you're looking at it, you can see great potential here, you want to go ahead and purchase it, you don't have cash. All right, so you go and get an FHA 203K loan. What you're going to do is you're going to borrow the money, purchase the house. You are then going to have draws done. So you will have a contractor come in, who's an FHA approved contractor, who come in, do the repairs. They'll submit those repairs to somebody at FHA who will come out and inspect it, and then they'll pay the contractor. And then your mortgage payment will go the additional of what that draw was. So say the balance increases as you take draws, do some more repairs, contractor comes in, takes a look, pay the contractor, and again your mortgage payment comes up. But when you're done, you have that fixed mortgage payment that you agreed on with the lender when you first started up. So why don't we see these more common? Seems like a great way to buy a house, right? Well, first answer is sadly that most real estate agents don't know a lot about them, so they run away from them. They're scared of them. They don't get it. They hear they're hard, they're complicated. They have some extra steps. They're not hard, they're not complicated. The other thing that agents hear is that they take more time to do. They do take a little bit more time. Typically, if we're writing you an offer on an FHA contract right now in this market, we're going to go 45 to 60 days for closing in order to make sure there's enough time for everything to get done because everybody's so busy right now. If you were going to write an offer on an FHA 203K offer property right now, I would say let's plan 60 to 90 days after having a conversation with the lender. So they are going to take a little bit longer. Again, they're not that much more complicated. So what do you need to do to make sure you can get one that goes off without a hitch? One, work with an agent that's not scared of them. And again, the majority of agents are scared of them. Everybody on our team, they're versed in them. They're not scared of them. Happy to help you with them. Next, you got to have a lender that's experienced with it. The reason that you hear lenders also against them is because they don't know anything about them either. They can legally write them. They probably have the loan program in their mortgage company, but they just don't know anything about them, so they shy away from them. Or they feel like it's too much work and not worth the money when they could just instead direct you to go buy a house that's already been done. So you want to find a lender that knows what they're doing with them. And in fact, you probably want to find a lender that specializes in them. And Wells Fargo actually has a lot of loan officers that do that. So a Wells Fargo loan officer would be a good place to start, not to plug any particular lender, but it's something they do well. So get an agent that's not scared of them. Get a lender that's not scared of them. When you find a property, those two folks can both talk to the listing agent if they happen to be scared of them and get them over it. And so it winds up being a good opportunity for you to get into a property that you might otherwise have to pass on. So if you've got a property out there that's dinged up that you kind of have an interest in and you want to find out more about how to do a rehab loan on it, give me a call or drop me an email. So thanks again for watching this video, and I appreciate you taking the time. Have a great day.